Tariffs and counter-tariffs with no end in sight.
No, I'm not going to bend at all.
As of right now, the U.S. places a tariff on metals imported from the European Union. The European Union puts a 50% tariff on U.S. whiskey. U.S. President Donald Trump threatens a 200% tariff on European wine, champagne, and spirits.
We've been ripped off for years, and we're not going to be ripped off anymore.
The U.S. imposes 25% tariffs on Canadian metals and an April tariff on lumber, dairy products, and cars. Canada levies, then withdraws tariffs on electricity exports, but keeps tariffs on $21 billion worth of American goods.
We don't need their cars. We don't need their energy. We don't need their lumber.
The U.S. puts a tariff on Mexican foods, but exempts certain items included under the North American Free Trade Pact, signed in President Trump's first term. A tariff on cars from Mexico is also rescinded. Mexico says it will respond on Sunday. And for China, 20% tariffs overall.
Now, there'll be a little disruption, but it won't be very long.
The unpredictability drives U.S. stocks wild. Analysts say if it continues, all governments lose.
They think that if they protect their economy, they're going to increase the productivity and the competitiveness of industries in their own market. And actually what they're doing is putting them at a disadvantage in terms of price and access to global markets.
The U.S. argues economic pain now will yield great results later. Treasury Secretary Scott Bessent.
The tariffs, if we've got strategic industries we've got to have. We want to protect the American worker, but a lot of these trade deals haven't been fair.
The administration is sending a signal that it's not business as usual here. It's now more exports and less imports. The next round of tariffs goes into effect April 2nd. Carolyn Pursuti, VOA News, the White House.